So, and I'm going to go ahead and share the screen. Okay, so it's going to be very simple. I'm just kind of going to go through it, and then if you guys have any questions, go ahead and ask them at the end of the training, just so that way it's easier for I'm not like stopping in the middle and then restarting the training, we could say. Okay, can you everyone see this?
Yes.
Okay, perfect. So as you
Like-
know, the cycle of the loan for me is very important, just because that way you guys will know, what do you guys do first? I mean, the first thing is trying to get the client, right? Like you get the client, you take the application, we'll go here. We're in the pre-approval stages. So at this stage, we're collecting documents, we're collecting the application, their information, we're doing a credit report, we're reviewing W-2s, we're reviewing pay stubs, tax returns if needed. If you have a client that is 100% W-2 pay stubs, they work for a company, you do not need to request for tax returns. The minute you hear that the client is self-employed, that's the minute that you're going to ask, are you an individual owner or are you in a corporation? Because there's a difference in both of them, because it's going to inquire more information, more documents. So if they say I'm a Schedule C, we just need their individual tax returns. If they say I am self-employed and I own a corporation, then you're going to request for their business returns and also their individual returns and K-1s, okay? If that's what they do, if they're on a corporation or if they're in a partnership. Also, we collect 2 months of bank and basically assets. We need to review everything. Right now, I'm just going to go through the cycle of the loan, and then we're going to do another training on what to look for when you're reviewing the documents. We'll do one on what to look for when you're reviewing the credit report, because there's things that we need to look at, because as you guys know, each if it's FHA or conventional, Fannie Mae or Freddie Mac, they all have different guidelines for credit reports. When you're looking at a W-2, what to look for, what to verify, same thing with pay stubs. So we'll do another training, and we can either break it down into different, whether it's like reviewing the credit report, reviewing a title report, just for you guys to know, what happens, just so that way when there's an issue, you'll know how to communicate with the client and not just be like, oh, well, the processor is requesting for this. Like, I want you guys to know why things are being asked for. Does that make sense? So once we collect all this information, the credit report, we review that. The client, we give them the pre-approval, right? We give them the pre-approval, and then the client is ready to go and look for a home. Now, my pre-approval consists of the pre-qual letter, a copy of the FICO scores, not the full credit report, just the FICO scores, a copy of the first page of the assets. Assets meaning whatever accounts we're using for to show money, whether it's a bank statement, whether it's a 401k, whether it's money from shares or whatever the case may be, the first page showing where the money is coming from. Another thing that I add is a copy of the DU or LP, because then that will give the seller and the agent a little bit more, they'll feel better, we could say, in regards to the offer that's being submitted, because they know that the loan officer did their job and they reviewed everything before sending out a pre-qualification packet. And so that's the difference when they ask what's a pre-qual and what's a pre-approval. A pre-qual is just basically the letter. You haven't verified anything. It's all verbal information. The pre-approval packet is you have done what you were supposed to do, and you have verified income with pay stubs, W-2s, and a verification of employment if it's needed. If you're ever using overtime, bonus, or commission, try to get in the habit of ordering a verification of employment. Because for those type of extra incomes, we do need to do an average. And again, depending on what kind of program you're doing, if you're doing a conventional, we just have to make sure that they've been receiving overtime, bonus, a commission for at least 12 months, and it's most likely to continue. If we're doing an FHA loan, we have to confirm that they have been receiving that extra income for over 2 years, and it is most likely to continue. So then this is, taking the full application. Basically, they already found the house. We have everything. Then the file is going to be, once they found the house, we open escrow. Opening escrow means that the offer has been accepted for the client, and the buyer is required to submit an EMD. EMD stands for escrow. It's an escrow deposit, okay? Escrow deposit means the initial deposit that's given to escrow. Once they submit that, then we are officially in escrow, and then the timeline will start, okay? I will go over the timeline if we have time at the end of the meeting. There's a timeline that I like to follow, and it usually works in order to close your files within 21 days to 30 days, okay, if you follow that timeline. So basically, we submit the file to processing. The processor is going to be in charge, again, of reviewing your 1003, of reviewing all the documents that you collected at the beginning. And remember, let the processor know what you're doing on the loan, because she doesn't know. She's never had any type of communication with the client. So whatever you tell them, that's what they know. So let them, when you submit the file to processing, let them know what kind of loan you're doing. If you're doing an FHA, 3.5% down or 5% down, what kind of income are you using? Where are you using the assets from? Is there an issue with credit? Issue with credit means, like, do they have child support? Do they have an IRS payment? Are they being a non-occupant co-borrower? So those are the extra things that you want to let your processor know, because she doesn't know. Once the file is being processed and it's being disclosed, you want to make sure that the client signs loan disclosures as soon as possible, because that's going to help the processor move on to the second stage of processing the file. Once the borrower signs the disclosures, then the processor can go ahead and order the appraisal. They can order all the items from escrow. They can order verification of employment. They can order the SSA, which is the Social Security Administration verification form. They can order transcripts. So it is very important for the client to sign disclosures as soon as possible, as we need the borrower's authorization in order to start processing the file. Does that make sense? Okay, then we go, once the file, is submitted with processing, the processing does everything that they have to do. The file is ready to be moved to the other stage, which is going to be submitting it to the underwriter. Basically, the underwriter is going to be doing the exact same thing that the processor did. They're going to be verifying W-2s. They're going to be verifying pay stubs, verification of employment. They're going to make sure that the SSA has been cleared. They're going to be running CAVERS for an FHA loan. CAVERS is a process that we have to do to make sure that the client, especially if we're doing an FHA loan, that the client does not have any bad federal debt. If they have any student loans and collections, they cannot get an FHA loan. So we have to get a clear CAVERS. Do we do anything on our side as a loan officer? No. But again, when we're reviewing the credit report, and if we see that there's a collection, that's when we need to have the client work on their things, so that way we can get a clear CAVERS, or else we cannot close the loan. The underwriter will be in charge of not just verifying income. They're also going to be verifying what's called a title report to make sure there's no liens or judgments against the house, to verify that the owner of the property is the seller on the purchase contract. They're gonna verify the appraisal, make sure that the appraisal report is in good condition. And again, we can go over training on the appraisal, just so you guys understand, in case you have any issues down the line. But there's other things that you have to verify when, or the processor and the underwriter verifies when they're overlooking the appraisal report. You know, one of the things is making sure the name matches the buyer's name, the seller's name, the value of the property, the condition of the house. You know, if it's a C5 condition, it's a no-go on the house. If there's any structural damage, then the underwriter is going to request for items. If there's any mold or anything that the appraiser has stated on the appraisal report, the underwriter is going to come up with, you know, requesting additional items. So once the underwriter reviews everything, they're going to go ahead and issue you the loan approval. Okay. Once you get your loan approval, then you're going to have what's called PTD, prior to doc conditions. Prior to doc conditions, meaning, hey, you have your loan approval, but in order for you to get your clear to close, meaning the green light to order loan documents, I need you to provide the following information. So you, as a loan officer, it is your responsibility to try to get as much information at the beginning so you get a clean approval. So when you get your approval, when you get your loan approval, it's just going to be basic information, you know? Maybe like we didn't get the SSA on time, or maybe, you know, maybe the borrower was on maternity leave. So we need the verification of employment to state that, you know, to state that they were on maternity leave. Just any other little remarks, or maybe, in case you guys don't know, each document that we get from the client also has an expiration date. So the credit report, you know, if it's over 90 days, the underwriter might request for a new credit report. Also, bank statements, they also have an expiration date. So pay stubs, they expire within 30 days. So all those little things, the underwriter will be requesting on the conditional approval, okay? Once you collect all of your conditions from your client and the processor fulfills all of the conditions from their end, then we send the file back to underwriting. And then once the underwriter reviews everything again, once we send the file back to the underwriter, then we're sending it back to get our CTC. CTC stands for clear to close, okay? So what happens when we send it back to clear to close? It means the underwriter, again, is gonna verify all the prior to doc conditions that she requested. She's gonna sign them off. Once she signs them off, then we get our clear to close. Once we have our clear to close, the file goes into another stage. It goes into loan docs. It goes into the loan docs queue. From there, you have about 24 hours to 48 hours max to get your loan documents, okay? That's when, depending how involved you want to be in the file. But personally, when I see my CTC, I email escrow and I let them know, hey, escrow, we just received our clear to close. Please expect to receive loan docs within the next 24 to 48 hours. Here's the borrower's contact information, so that way you can call them to set up signing. Okay? So that way escrow knows, you know, and that way we rush them. We let the agents know that we have clear to close, and docs are going to be on their way to the escrow company. Okay? Then the borrower is going to go ahead and sign loan documents, right? Once the borrower sign loan documents, we can literally fund within 24 hours. Okay, so if let's say loan docs are received this morning and the borrower signs tonight, we can fund by tomorrow before 2 p.m. Our cutoff time for funding is 2 p.m. Okay. If you need to request a rush, it is possible to request a rush. Obviously, you know, just don't burn all your rushes, or else when you really need a rush, they're not gonna pay attention. So just make sure that you use your rushes, you know, if they're really, really needed, you can contact Jamie, who's our processing manager. But honestly, they're on it. They're always on everything. Mitzi is another processor. She processes our bank statement programs, non-QM loans, and also she processes our down payment assistance. She's very thorough. She's on it. She's really on it. And Jamie is on it as well. She works at a fast pace. But let me see what else. Do you have any questions so far? No?
No, I don't have question.
Okay. So what we're doing through, you know, while we're going through the whole process of you know, the life of the loan, we could say, a lot of people ask, when can we lock the loan? Okay. You can lock the loan right before submitting the file if you want to. So if let's say you go over the rates with your client and your client is okay with that interest rate, you know, we got the contract today and I'm going over the contract with the client and we're like, okay, we're on it. We're starting the processing of the loan. This is what the rate's going to be. This is what your payment's going to be. And if it's before 4 p.m., then we can lock the loan, okay? The only thing is that once you lock the loan, you're pretty much triggering the file. When you're triggering the file, as you know, you have 3 days to disclose the file, okay? So there's times where I don't like to lock the loan before it gets disclosed, because God forbid, title and escrow, they take, you know, a long time to send us over a title and escrow fees, then we're going to be against the clock, you know? So I personally like to lock my loan after the file gets disclosed. But if you see that the market is going crazy and you don't know, then obviously you want to get on it, you know? So then you lock the loan, and that's when you take the initiative and you email escrow and title and you request for title and escrow fees, because you want to get a head start. So that way processing has the fees when they need them and they can disclose the file. Okay. So that's when you can lock the loan. Now, the other question is, when do we send our closing disclosure? As you know, borrower cannot sign loan documents before signing the closing disclosure, the CD, okay? In order to get your CD out, you need the following. You need the loan to be approved. You will need the loan to be locked. You will need your homeowner's insurance quote, and you also need a copy of the appraisal. If you don't have all 4 things, you cannot send out the closing disclosure, okay? Once your closing disclosure is out, no numbers can be changed. And that's the reason why it's very important to get those items in, because your appraisal is needed, because you want to make sure that the value is there. Because if you send out your CD and the appraisal comes in less, guess what? You cannot change the appraised value anymore. If your CD is out and you didn't have your homeowner's insurance quote in the actual insurance invoice, if it's more, you cannot change it. Then it becomes a cure. A cure means an amount that the branch has to cover, okay? Because the borrower cannot pay for it anymore. So again, the life of the loan, you know, we get initial pre-approval. Once we have a house, we have a contract, then the file goes to processing. The processor will disclose the file and start working on the file and send the file to underwriting. Once we get loan approval, we start collecting documents that the underwriter has requested, and then we go send it back to get clear to close. Once we get our clear to close, then we can go to loan docs. Once the file is, once the loan docs have been released to escrow, borrower signs, and we fund. Now, after we fund, our job is complete, correct? But we still need to record the file. We don't do it. Once we fund, we fund. I send out the text message or email. Congratulations, your loan has funded. We have not finished your application, your loan yet. I mean, the funding is complete, but we still need to get confirmation from the county that you are legally the owner of this property. Once we get confirmation, we're done. It's done. Okay. So I added some other things here, if you can see, on what other items are being done after we get our clear to close. We do require and this is something that you need to let your clients know. We do require a verbal verification of employment. So then that's when you communicate with your clients. Do not change jobs while we're doing the loan, okay? Because we are gonna need a verbal verification of employment right before we close. Usually it's about 10 days before we close. Sometimes they require 5 days before we close. During COVID, we were doing it 48 hours before we funded, because we got to make sure that the client was still employed. So, you know, it all changes, but usually it's within 10 days, 1 week that we do it. Also, for conventional loans, we do what's called a credit refresh. Again, for down payment assistance, they also do it for FHA loans. So make sure you inform your clients. Do not add any debt. Just because you have your loan approval, it does not mean that you can go on a shopping spree and use your credit cards. Why? Because our ratios might be pretty high. And if our ratios are high, they're going to have to pay off that debt if we were not counting with a credit card payment. So let them know, do not change jobs, do not co-sign for anyone, do not go and spend your money on your credit cards, okay? The other item that I added was, you know, all documents do have an expiration period. Usually it's within 90 days. But again, credit reports are 90 days. Sometimes DU will call for 120 days. So if you have one of those clients that you pull the credit and now it's bad, you're gonna have to pull the DU guideline and just show it and say, hey, DU doesn't require a new credit report, so I am not gonna provide a new credit report. But just keep that in mind. Credit reports are good for 90 days. Bank statements are good for 30 days. You know, so, I mean, just those kind of things. Do you have any questions?
No, for now.
Okay, perfect. So, we have about 9 minutes left. So if you don't have any questions, we're pretty much done with the training. I hope this helps you guys in regards to knowing what the life of the loan, the cycle of the loan consists of. So when you have clients, you know, so what's next? You already know what's next. And I'll go ahead and email you guys this little pamphlet so you guys can have it there as well, just to have an idea.
Thank you so much, Meli. I think I am pretty sure I will have more questions once I am during the transaction, during the process of the loan. I'm pretty sure maybe I have questions for you, and thank you so much for your support and your time.
Perfect. So what would you guys send me an email and let me know what kind of training you guys want to do next time? We can have it where maybe we can do every Friday and 40 minutes of training, you know, like something quick. And then we'll also do the personal trainings for something more in depth, you know, like we can use these type of trainings to, again, review credit reports, review an appraisal report, review W-2s, because then we'll dissect it document by document. But I know calculating income, it does require a little bit extra time. So we can do those in person, you know, when we're calculating income.
Yes, I think I don't know if everyone is agree with me or agree with me, but I would like training regarding more training regarding W-2s, how to review it for self-employed, basically self-employed, because for W-2 it's easier. But yeah, I need more information about that. I know you gave us a good information last time when I had the meeting with our Musab, but I still need more training
Correct.
for
Correct.
next time, for the next 45 minutes, Meli.
Correct. Yes.
Thank you so much.
Just email me, you know, what kind of trainings you guys want to do. Maybe next Friday we'll do a, you know, let me know. I'm open to whatever training. Just let me know ahead of time so that way I can prepare something and you guys can see it as well, not just hear me talking.
Yes, thank you so much.
All right.
Meli,
All right, ladies.
Thank
you. Feel free to email me or text me if you have any questions on scenarios. You know, I'm here to help.
Meli, can you hear me?
Yeah, I can hear you.
Meli, thank you so much for the training. I was gonna ask you, do you have like templates of the emails that you sent since the beginning of the loan of the process?
Yeah, definitely. I'll go
Yes?
ahead and look for one right now. They're very, very basic. So I'll look for one and I'll email it to all of you guys so you guys can have like a little, you know, idea of what it is. But it's very basic. Just remember, you
Yeah,
just want to
like
tell the processor the story of your client, you know?
yeah, whatever you like the email that you send to escrow, like kind of like follow you, like how do you process your loan and how you connect with your client, with your team and all that.
Yeah.
Okay.
I'll send you guys a sample of the email that I sent over to processing and an email that I sent over to the clients, letting them know that we're officially in escrow, what to do and what not to do.
Yes, and what we need from escrow, like the fees when to start the
and usually for
process,
escrow,
yeah.
I'm pretty basic. All I ask for, hey, can you please send me title and escrow fees, and you'll see it. And then I just let the processor do the rest of the job, requesting, you know, like requesting the title report, CPL and all that stuff. Like that's
all the
on
other
them.
stuff.
You know what I mean?
Okay. Yeah. Okay. Thank you
All
so
right,
much.
guys. Well, have a nice
Thank you for your
weekend
time.
and
You as well.
you know, we'll be in touch, okay?
Okay.
Okay, Meli,
Bye-bye.
thank you.
You're
Bye-bye.
welcome. Bye.
Bye.